Well, hi everyone. It's Ryan with SacramentoAppraisalBlog.com, and let's talk about the hot, flat, and luxurious market. This comes from a presentation I did yesterday at this luxury event, and here's what I'm going to do. I'm going to give a brief market update, just kind of talk about prices and momentum real quick, and then the rest of this is looking at the $1 million market. I think these are some really interesting stats. I've never shared these before, and I hope you find it useful. So let's dive in. So right now the market, it's we see the cyclical vibe we see every year, and prices ticked up again last month, and you can kind of see in the region that prices are about where they were um, the same time last year, at the height of last year anyway. And so in Sacramento County, prices, the median price and price metrics are a little bit above, and so it's been really nominal growth, but kind of a normal spring. And so we can see from March to April, here are different price metrics. They're all up about 2% from that 1 month. Okay, so prices are absolutely up from the really dull fall season, but they're not really up that much from last year. And so I think this is the bigger story. When we compare April 2018 with April 2019, you can look at price metrics. They're up 2 to 3% in the region. And that's very, very modest growth, very nominal. And it's one of the reasons why I'm calling the market somewhat flat. It's one of the reasons why when I pull comps, that there's really not that much growth. Okay. Now, some neighborhoods, of course, they can be more aggressive than others. It's like the stock market. Not all stocks are doing the same exact thing. Some could be declining, some could be increasing, some could be going crazy, some could be flat. And the same thing is true in neighborhoods. And so we have to remember that if it's priced correctly, it's probably going to have multiple offers. It might even get bid up. If it's not priced right, you are going to sit on the market. You are not going to sell. That is the truth, okay? But the market is pretty flat. So here's my favorite analogy. The market used to be driving 80 miles per hour. Now it's driving 25. This comes from Barry Habib. So we've still seen forward progress, but it's very minimal and very modest. Okay, here's how I support that. Here's the median price of April from 2013 to 2019. Over time, you can see that the price change per year has really diminished. Okay, so you can see why I'm saying that the market has slowed. Here's January to April for each of these respective years, and you see a similar dynamic where we have modest growth, still forward progress, 25 miles per hour, definitely not 80 like it used to be. And here's an entire year of sales. I really like this one because we're looking at, anywhere typically 26 to 28,000 sales in each year. So there is lots of data here, and it just shows that the market has absolutely slowed. So I'd say this is my last slide until we get in the $1 million stuff. The market's felt uncertain, but it's flirting with normalcy. Okay, really that uncertain vibe was debunked from 2018, and we've had a much more normal feeling spring. I think in large part just because of interest rates. Okay, that kind of changed the game to have low rates again. And so, but you can see this red line. It's the pendings. They've been pretty strong, and very reminiscent of where pendings were last year. And so I'd say pendings have been normal. Sales volume is still down. It's down about 8% in the region. That's 2,500 less sales this year. It's not down at an alarming level, but obviously if that persisted to be down even more, if it becomes a huge trend, then I think that's where we'll say, hey, what's going on? So anyway, here's the $1 million market. Okay, this is fun stuff. Hope you like it. So above $1 million, these are the number of sales in 2012, 2013, 14, 15, 16, 17, and 18. And you can see the trend is clear. We've had much more $1 million activity through the years. And when I say region, I mean Sac, Placer, Yolo, and El Dorado County. And by the way, here's under 100,000, and so it's really the reverse of what we've seen in the trend, which is makes sense because we know that our market has risen in price, become less affordable. So here is the $1 million market inventory by price range, and you can kind of see the higher the price, the more inventory there is. And right now there's a 6 month supply of $1 million homes. Now that's really not a lot. I find in many months it typically ranges anywhere from 5, 7, 8 months or so. Sometimes it's even more, even above 10. And so 6 is very normal. Okay, there's actually over 420 listings right now above $1 million in the region. So there's really, I mean, buyers have their pick. It's a normal level still, but it just shows like sometimes these properties they spend more time on the market because there's frankly less buyers buying these types of properties. Um, how long do they spend on the market? You can kind of see the trend by price range. The higher the price, the longer properties tend to take to sell. And so last month that was 66 days, and typically it's usually anywhere from 60 to 90 days or so on average. And so if you have $1 million listing, it's probably going to spend more time on the market. But here's the interesting part to me. When looking at all $1 million sales this year, 44% of these sales actually sold in less than 30 days. And so almost half of sales are going very quickly. And I think that speaks to properties needing to be priced correctly. Okay. Now, some $1 million listings are really unique and they simply need to spend more time on the market because you need to fish for that unicorn buyer for the unicorn property. Okay. And so there are homes like that. But keep in mind, 25% of $1 million sales did spend over 120 days on the market so far this year. Okay, so here's the average. What percentage of sales have been cash above million this year? What do you think? Well, here's the answer, 21%. And so that's a strong dose of cash. The market as a whole in the region has about 15% cash. And so we see more cash above 1 million. But keep in mind that this also means that 4 out of $5 million sales are going to be having an appraisal. And so it just underscores the need to price correctly if you want to move the property. Okay, the $1 million market isn't exploding so much, just like everything else. I mean, it's the market has gotten softer, and so you can't price however you want, even with the Bay Area influence. So, how many $1 million sales were there last year in the region? Any guesses? 654. Okay, and how many so far this year? 231. And I think these numbers in the next couple months, they'll probably reflect about half of what we saw last year. So it looks like we're on pace with volume of last year. Here's the $1 million market in the region. Here's 20 years of sales. I know these are a lot of dots, and I'll show you a different graph in just a sec, but here's the high earlier, about a year plus ago, a $6.9 million sale in Granite Bay. Okay, so here's an interesting way to look at the market, though. You can kind of see in 98, as values increased and then the market went down, sales volume declined, prices declined. Then the market began to turn around 2012, and we really have seen a strong rebound in $1 million sales. And I would say some of the highest prices ever, but I get very literally the highest price ever. Okay, and so it's been a very, very strong $1 million season. Okay, now where are $1 million sales happening in the region? Since 2012, since the market turned around in Sacramento County, 28%, El Dorado County, 22%, Yolo County, 10%, and Placer County, 40%. And this is astounding because Placer County actually has about 4 or 5 times less the amount of sales total as Sacramento County. And so to have 40% of the $1 million sales in the region is pretty remarkable. And really the same thing with El Dorado County. Their sales volume overall is very, very minor compared to Sacramento County. And so it's phenomenal to have these numbers that high. So what about $1 million sales by city? Okay, Granite Bay had about 20% of all sales in the entire region over the past 7 years. That's phenomenal for one area. El Dorado Hills was 18%. Okay, and here was during my presentation yesterday, and I said, and what about Rio Linda? What do you think? And yeah, 0%. So $1 million is really high. Rio Linda, Alberta. There's actually a $3.5 million listing in Alberta right now, but then again, it's been on the market for over 8 years. So here's one in Loomis, 95864, East Sac area. So interesting to consider, where are the $1 million sales occurring in the region? And really they're spread throughout, but we can see clearly there's pockets that command higher prices compared to others. So this is an interesting thing I wrote about this week on my blog. This is East Sacramento neighborhood boundaries. You can see from 1998 through 2006, this was the previous real estate cycle before values started to decline. Here's where $1 million sales were occurring. And you can see they're highly concentrated around the Fab 40s and around McKinley Park. And what's interesting to me is that fast forward today, to the most recent cycle, 2012 through 2019, you can see a couple things. There's a lot more $1 million sales, and they're spread out in other areas. Now, there's a lot more, as we can see. There's actually over 3 times more. But I mean, we have to realize some of this is due to inflation, and some of it, I mean, clearly prices have risen. And so it makes good sense that there's more $1 million sales. But I find the most interesting aspect is that the $1 million market has really expanded as demand for ESAC has exploded. And so you're starting to see $1 million sales in areas where you just wouldn't see them before. Okay, and so that's fascinating, and it's a reminder that markets change over time. And sometimes, if we're pulling really old comps, we can't expect the market to be the same as it was then, because now it might be a little different. Okay, and I do hear people talking about the Bay Area influence, and I don't want to hype up the market like the Bay is everything, but Bay Area buyers are definitely here, and I think it has made a difference on the higher end in some regard because there is cash and buyers are willing to pay higher prices in some areas, and we've got to pay attention to that. So one of the things I did in my presentation, I wanted to talk about the dynamics of non-traditional models and how some non-traditional models are showing up in the market. And I think Redfin is a traditional brokerage, although they have a different fee structure, so I included them here though too. And so um, I wanted to show this. So Help You Sell has had one sale so far in 2019, one listing anyway that closed. Redfin 1, Open Door 0, Purple Bricks 3. And one of my reasons for including this is I was in a room full of agents and just wanted to talk about how the market's changing and it's becoming more digital. And there is honestly a place for companies like this in today's market. It's just true. And Zillow is going to enter the market too. But I think for real estate professionals watching the market change and morph, you got to realize that if you want to continue to stay in the game, it's important to look to markets and work in markets that are more difficult. Okay, the $1 million market requires a lot of money to market properties. There's a lot at stake. I find value is very challenging because sometimes you'll pull comps and go, gosh, is this worth 1.79 or excuse me, 1.7 or 1.9? It's not easy to see the market. So there's a lot of risk. So Open Door, they'll have success in lower price points. From what I read, they're looking more 300 to 600,000 conforming neighborhoods. They want to invest in areas where it's safe. It would be very, very risky at the $1 million price point. And so, what about how many $1 million sales did they represent buyers in during 2019? Help You Sell 0, Redfin 3, Open Door 0, Purple Brick 0. And so I think that this to me is not designed to dog any certain companies. And in fact, I would think that over time, Purple Bricks and Redfin will probably gain a little bit more market share just because of the nature of their marketing. Okay. Discount brokerages or non-traditional models will appeal to a certain segment of the market. It just will. That's true in real estate right now. But I think the traditional model fits very, very well above the $1 million level. Now, keep in mind, it is a crowded market. There were only 600 plus sales last year, so it's not necessarily easy to break into this. But anyway, food for thought. So, some quick closing advice. I'd say to anyone working in real estate, tell the story of the market to your clients. You show your value these days, not in cliches, but in talking about specific trends. And when someone says the market is slowing, I mean, you can prove it with stats or use some of my charts if you wish. If you want to use any of my graphs, I mean, that's fine. Please, please. Let's say anticipate who your future clients are going to be in 2019 and 2020. This is so key. How is the market changing right now, and who might you be working for in a couple years? For realtors, help your sellers understand how price sensitive the market is. It is very sensitive out there, and frankly, I just think that sellers are still behind the pricing trend. They need to catch up to the market, and my sense is that they'll do a better job in coming time, but they really need to get with the program if they want to sell. I can't tell you how many sellers I talk to or hear stories about where they simply are not pricing correctly. They are not listening to agents. They're not listening to the market. They think they know better than anyone, and maybe some do, but I got to tell you, if you're not getting offers on your property, it's sitting and there's no access problems to the house, it's time to listen to the market. So, and lastly, I'd say don't be afraid to tell people the market is slowing. If you work in real estate, it's okay to say, yeah, it's super competitive. It is. You will probably get multiple offers if you're priced correctly, but we also see price momentum is slowing. Okay, we don't know exactly where that leads eventually, but we don't have to say this means the bubble's about to pop. I mean, that's a prophecy into the future, but we can say legitimately, like, yeah, momentum is slowing, and that's not a dirty word in real estate. So, anyway, I hope that was helpful. I have a weekly blog post. You can check it out if you wish. Here's how to contact me. If you want my full presentation, just send me an email and then I can give that to you. But otherwise, I hope this was helpful. Thanks again for hanging with me. If you liked it, give it a thumbs up. Take care.